It's been a hell of a week. We were in the Vancouver Resource Investment Conference early this week, and gold went up to 5,500 US dollars per ounce. Silver went up to about 120 US dollars per ounce, but they've both since pulled back to this morning, on Friday morning as we record this, 5,000 for gold, 100 for silver, falls of 7% for gold, silver 11% in minutes on Thursday.
Hey everyone, welcome back to the channel. Really glad you're here today, because we've got something absolutely critical to break down. So John Fenik from Fenick Consulting just dropped this interview with Kitco Mining, and he's talking about what might be the most insane week in precious metals history. We're talking gold spiking to $5,000 to $500, silver touching $120, then both crashing 7% and 11% in literal minutes. But here's what caught my attention. While all this chaos is happening, he's explaining why the major banks are still targeting $6,000 gold and why mining stocks are completely broken compared to the metal prices. Make sure you stick around for the full breakdown, because the ending reveals what's actually going to trigger the massive sector rotation everyone's been waiting for. And honestly, it's not what most people think. And hey, drop a comment below and let me know where you're tuning in from. I love seeing our community spread across the globe. All right, let's jump straight into this.
Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is John Fenik of Fenick Consulting. John, welcome back to Kitco.
Thanks a lot, Paul. Glad to be here.
John, I almost don't know where to start today. There's been so much going on these past few days, but let's start perhaps looking towards the future, and one of the big things that may impact the future, and that is the fact that former Fed Governor Kevin Warsh has been nominated by President Donald Trump to chair the Fed, when Jerome Powell, who was also nominated by President Trump to chair the Fed when Powell steps down in a couple of months' time. John, Powell was a Trump appointee, I think, in 2018. What will be different this time? What makes people think, or Trump think, that Warsh will cut rates when Powell didn't?
Yeah, that's the $64,000 question. I mean, this is breaking news. Obviously, we're recording this a couple hours after the announcement by Trump, so I haven't had too much time to digest that. I've been drinking out of a fire hose with gold down 6% and silver down 14% as we record this. I put out a note to all my clients first thing this morning, however, saying that we're in a bull market. This is a bull market for gold and silver and commodities in general, and don't get off the ride here, because this is just, noise. I mean, whoever Trump puts into office, you have to remember who Donald Trump is. And Donald Trump is a capitalist. He wants things his way. And if you don't believe me, you have to turn on any news channel and see how things are going in Venezuela and other parts of the world, right? He's getting his way. So Warsh, I don't even care what he did previously. It's a new paradigm. We're in a new world. And I thought many people weren't mentioning this, but Jerome Powell was obviously talking the 28th of January, and a female reporter asked him about the US dollar, and he totally blew it off. Like, she was talking about the dollar decline and he wouldn't comment on it. It's eroding US purchasing power, and Americans deserve to know what's happening with the dollar decline. Yet these guys barely even talk about it. It's hilarious.
And that is quite severe. Well, let's move on to the precious metals that you alluded to. It's been a hell of a week. We were in the Vancouver Resource Investment Conference early this week, and gold went up to 5,500 US dollars per ounce. Silver went up to about 120 US dollars per ounce, but they've both since pulled back to this morning, on Friday morning as we record this, 5,000 for gold, 100 for silver, falls of 7% for gold, silver 11% in minutes on Thursday, which was yesterday, which my colleague here at Kitco, Ernest Hoffman, wrote about, and we will put the link to his article in the notes to this episode. The big question: who knows where the prices will be by the time that this Digging Deep is published? John, why the volatility, or is this the pullback that we've been hearing about? Is this the pullback coming?
Well, I think, I'm sure I'll get shelled for this comment, but you need to look at a long dated chart of silver, for example, right? Silver was $30 was 11 years worth of resistance. So anything over 100 is a gift if you've been long like me for many, many years. You have to trim positions eventually because there will be pullbacks. Nothing goes up in a straight line. Silver tried really hard. I mean, if you look at a chart of SLV or whatever you use to chart silver, I mean, it is pretty hockey stick looking the last couple of weeks or months, right? So like at some point you have to say to yourself, what's my entry point on this particular investment? And what's my risk tolerance for this thing being down 16% in one day today, right? Like this is just economics 101, investing 101. And if you don't have an answer for that, you need to align yourself with a professional like myself or a financial advisor or someone in your life to be able to give you some guidance, because this is not going to change. Volatility is here to stay in 2026 and beyond, I think, because look at Microsoft yesterday, right? Blue chip stock out of the gate down 12% on earnings. Like this is a new paradigm and people need to understand that.
This is the volatility everyone needs to understand. When John Fenik said he's been drinking out of a fire hose with gold down 6% and silver down 14%, he's describing what just happened in the markets. But here's what most people are missing about this move. Gold hit $5,500 per ounce. Silver touched $120, then both collapsed. Gold fell to $5,000. Silver dropped to $100. We're talking 7% gold drops and 11% silver crashes in minutes. This isn't normal market behavior. This is what happens when over-leveraged positions get liquidated all at once. Now here's the expert, Take That Matters, when he mentioned that $30 silver was 11 years of resistance and anything over $100 is a gift. He's absolutely right from a technical standpoint. But let me add context here. Silver broke through $30 and never looked back because the fundamentals changed. Industrial demand for solar panels, EVs, and electronics created a structural deficit we haven't seen before. The volatility comment? Critical. When he says volatility is here to stay in 2026 and beyond, this isn't fear-mongering. Look at what's happening with currency instability, geopolitical tensions, and the fact that gold just moved $500 in days. Microsoft dropped 12% on earnings. Microsoft, a blue chip stock. We're in a new paradigm where traditional correlations are breaking down. This volatility is the price you pay for exposure to the biggest wealth transfer we've seen in decades. The question isn't whether to be in precious metals, it's how much exposure you can stomach during these wild swings.
Okay, but John, as we sit here today, gold's at 5,000, silver's at 100. Are these potentially new floors for the respective metals?
I don't think so. I think you could go considerably lower on both. Because again, these are massive moves. I mean, the moves in gold and silver have been what I call chunky, right? These aren't like we're up 0.5% here and 75 basis points there. These are up 2, 3, 4% days. That's very unusual. I put out a piece this week saying, gold being up $200 in one day and GDXJ, the junior mining ETF, barely making it up 1.5% is a warning sign. Like you have to pay attention to this kind of stuff and say, these things are starting to peak out a little bit. It's not bad if you're a long-term investor because these things are all going to be headed higher in the next 1 to 2 years, in my opinion. But there is going to be short-term volatility. And those floors, we haven't set the floors yet, Paul, but obviously like 50 is that big round number in the sand for silver, maybe 55. Like that's like your pain point. Which is a long fall from here. I personally feel more like 66 to 70 is sort of the floor for silver. And, gold is just cranking here. I mean, the banks that you and I talk about all the time, big banks, Goldman Sachs, JP Morgan, B of A, they're all at 5,400 to 6,000 gold, guys. I mean, this is what I'm talking about with the new paradigm. So if you're looking at gold at 4,900 or 5,000, I mean, that might be a dip you want to buy. I just think that you might get lower prices just depending on how this all plays out with Warsh and the general broad market, which is near or at all-time highs.
Okay, well, let's move on to stocks and how the metals prices are impacting the share prices of stocks. And I think it's fair to say there's quite a disconnect between where the metals prices are and where share prices are. And so I want to talk about why you think they're lagging so terribly. 2026 is an Olympic year, so an analogy could be that the stocks are the high school runner at an Olympic final. VRIC earlier this week had several conversations about consensus metal pricing being far detached from reality. And as a consequence, that's one of the reasons why company valuations very much understate the earnings potential of producers and the value of the metal in the ground of the explorers. We'll start seeing this in the next couple of weeks when the producers start reporting their full year 2025 results. John, what are your thoughts on the disconnect or the detach between the metals prices and the stock prices?
Well, it's extremely frustrating. As you know, I have a lot of money in gold and silver related equities. And so, yes, we have a huge position in physical silver and a decent one in gold. But I spent a lot of my time in the equity markets, and I wrote about this as well, probably about a month ago, that the silver equity ETFs, while having a great 2025, we're barely moving on a daily basis on some of these big daily moves on silver. And, silver's up 3%. These things are up 1%. You don't buy equities in anything that are related to a commodity to be down or be up 1/3 of the commodity, right? Like, it doesn't make any sense. So yes, I'm totally on board with investor sentiment saying, we need to see more of these companies start to market themselves and tell their story better. I mean, it's like part of it is on them. Like, this is not a wave a magic wand and all of a sudden your stock is recognized by the general public, right? So I think that's still a very big problem with junior miners. They're not on board with this in the hottest market of all time.
Now this is where it gets really interesting. He just said gold and silver could go considerably lower from here, but then immediately drops the floor levels. Silver's pain point? He's calling $50 to $55 as the big round number, but personally expects $66 to $70 as the actual floor. Here's why those numbers matter. If silver is at $100 right now and the floor is $66 to $70, that's a potential 30 to 35% drawdown. But look at the bigger picture. We're still talking about silver doubling from where it was trading most of last year. The bull thesis isn't broken. We're just experiencing a natural correction after a parabolic move. And then he mentions the major banks. Goldman Sachs, JP Morgan, Bank of America, they're all targeting $5,400 to $6,000 gold. These aren't retail influencers making wild predictions. These are institutional research desks with billions in AUM revising their models upward. When the smart money raises targets like this, they're telling you something fundamental has shifted in the market structure. But here's the real problem he's highlighting. When silver is up 3%, the mining stocks are only up 1%. You don't buy commodity-related equities to get 1/3 of the underlying move. That's a complete breakdown of the normal 2 to 3 times leverage you expect from producers. This disconnect screams one of two things. Either the market doesn't believe these metal prices are sustainable, or mining stocks are massively undervalued and we're about to see a violent catch-up trade, given that we're in what he calls the hottest market of all time, with junior miners still not participating. I'm leaning toward the undervaluation scenario. When that gap closes, it's going to be explosive.
As I mentioned, the full year results will start coming out in 2 or 3 weeks' time. Will that be potentially a repricing moment when the broader market sees the earning capacity of the producers at these price levels and the earnings multiples, and therefore they'll be forced to redo their models and put in different pricing in their models?
I see what you're saying, and I think that earnings season in February for a lot of the big cap gold stocks and silver stocks will be phenomenal. Whether or not that generates the sector rotation that you and I are looking for, I don't think that that's going to be it unless the broad market is turning over at the same time, right? Like I looked at charts of things like Tesla and Apple from like Jan 1 of 2025 to December 31 of 2025. And you notice there's hardly any growth. Like, I mean, this is shocking because the average person is looking at their 401k and saying, man, I'm so smart, right? Like a lot of this is luck. Let's be honest. If you're an investor, you got lucky over the last 16 years, and you have to be able to take a step back from that and say, how much of this is my expertise and how much of this is luck? Luck factors into investing. So take a look at a chart of TSLA, Tesla, or AAPL, Apple, and you'll see what I'm saying. We're starting to peak out already. And when this thing turns over, meaning the broad market, it's going to get real ugly real fast. So I think that's what generates the sector rotation more than earnings, but earnings will help.
Okay, let's talk about some specific stocks now. Kitco Mining is going to buy Allied Gold for $5.5 billion Canadian to get a portfolio of African mines and projects. Ozone Gold also announced it's diversifying into Canada through the acquisition of the Casa Berardi mine in Quebec from Kitco Mining. Ozone has the Bombore gold mine in Burkina Faso. John, two very different views on risk here, I think. Zijin will consolidate its top 5 gold producer status, probably top 3 with this acquisition, getting more into Africa. Ozone is getting out of Africa, or not out of Africa, but it's diversifying away from Africa into what is considered a tier 1 jurisdiction to spread its risk profile. What do you make of these two transactions, and why do Canadian companies want to shed risk?
Well, I didn't really follow that transaction as I'm not an Orezone shareholder, but I will say that I know they've been talking about Burkina Faso and being the kind of like good jurisdiction everyone wants to invest in. And I was never really on board with that. I think companies are getting smarter with the fact that if they have one project that's big and kind of like not much else in their portfolio, they want to diversify into other countries. We're seeing that dynamic in 2024, 2025, and that will continue into this year. As for Hecla, I mean, Hecla's a beast. It's the largest, the oldest silver miner in the U.S. Symbol's HL, and look at that chart, beautiful, right? So I don't think that they really need Casa in their portfolio. They're always on the hunt. At least when Phil Baker was in the chair, like he was always cheap, finding cheap assets. And I think in this market, Paul, there's still going to be a lot of accretive deals for companies. We saw one recently where, Gold Resource, GORO, got taken out by Gold Group here at a 39% premium. And that to me is a win. So there's going to be a lot of deals done over the next, 2 years. I mean, a lot.
So here's the catalyst everyone's waiting for. Earnings season in February for big cap gold and silver stocks is going to be phenomenal. And when I say phenomenal, think about what these companies are reporting, with gold averaging well above $4,000 and silver crushing through $80 to $100 levels. But John makes a critical point. Phenomenal earnings alone won't trigger the sector rotation. You need the broad market to turn over at the same time. And check this out. When he analyzed Tesla and Apple from January to December 2025, there was hardly any growth. Think about that. The average investor is looking at their 401k feeling genius. But the reality is much of those gains were luck, not skill, riding on 16-year bull run. Here's the scary part. When the broad market turns over, it's going to get real ugly real fast. That's not fear. That's just market cycles. Every extended bull market eventually corrects, and when trillions in tech and growth stocks start rotating, precious metals and mining equities become the safe haven trade. That's what generates the sector rotation, not just earnings, but capital fleeing overvalued equities. Now let's talk about what's happening with M&A. Gold Resource getting taken out by Gold Group at a 39% premium, that's massive. When he says there's going to be a lot of deals done over the next 2 years, he's telling you that major producers are using this volatility to consolidate quality assets at reasonable valuations. That's exactly what happened in 2009 to 2011 before the last major bull run. The company's getting smart about jurisdictional risk, diversifying portfolios, and the fact that we're seeing $5.5 billion deals like Shen buying Allied Gold. This is big money positioning for what they see coming. You don't deploy billions of dollars in capital unless you believe metal prices are staying elevated or going higher. Bottom line, the volatility is shaking out weak hands. The disconnect between metals and stocks won't last. And when earnings prove these companies are printing cash at current metal prices, combined with broad market weakness forcing rotation, we're going to see a catch-up move that makes the current metal performance look tame. So what do you guys think of this? Leave your thoughts down in the comments. Please like and subscribe, and I will see you in the next video.